I'm Christian Maloof and welcome back to Capital Clarity. Let's take a look at the bigger picture in markets right now. One thing investors are watching closely at the moment is oil prices. I'm going to jump into the oil chart for you to have a look at it in the background. When oil rises, it pushes up the cost of transport, energy and goods across the economy, and that can keep the economy and inflation higher for longer. And if inflation stays high, it makes it harder for central banks like the Fed to cut interest rates. Higher rates tend to weigh on the stock market as well, so rising oil can act as a bit of a headwind for equities, and we've seen that in recent days. We've also had some economic data in the US on Friday that surprised markets. Non-farm payrolls actually fell by 92,000 jobs in February, which was much weaker than expected, whilst the unemployment rate has held around that 4.4% mark. That has caught markets off guard and raised some questions about whether the labour market in the US might be finally starting to cool. So we'll have to keep our eye on that. And lastly, on the geopolitical front, overnight Donald Trump made a comment that the current conflict in Iran might not last much longer, suggesting it's close to already being resolved with US military success. And if tensions do ease or we see a surrender, that could help calm energy and markets and remove a little bit of the uncertainty out there for investors. So with that all being said, let's just have a little look at the oil chart. And we really did gap and move up heavily over the weekend into Monday in Australia, Sunday night in the US when markets opened, and oil's futures got close to $120 a barrel, and we did see a really sharp push back off that level. No doubt they're looking at this, and no surprise that we did hit a level of supply, a level that was created on the 13th of June 22, so quite a while back, and we pushed back down really heavily off that in trade overnight in Australia, Monday US, and we've held a level here, daily 4-hourly level of support just in this 82 sort of region, and we've pushed up from there. So at this point in time, I think the market still does feel that we've got to continue up with oil based on the Strait of Hormuz being blocked and oil supply still being strained and uncertain. But with that news from Trump overnight, the market did get buoyed by that, and we saw some drops in oil off the back of that, and we saw some increases at key areas of support across the indices, which I'll cover momentarily. Am I in a trade on this at the moment? No, I'm not. It's too volatile for my liking. I closed the trade from last week that I was in on an oil long that did quite well. Unfortunately, we got a little bit of extra push up over the weekend, which would have been lovely to look at and be part of, but we got out, the volatility is high. And for the moment, I would say this level at $80 a barrel looks to be holding as we push back up, and we are as high as 89 this morning here in Australia in early market. It's a very interesting time for oil. Let's keep our eye on it. I'm glad that it's not up above that 120 mark at the moment. That would be putting a lot of pressure on the world economy. So let's just keep our eye on that though and see what happens. In terms of the indices, looking at the ASX, we do have a level here of support at 8588. That level did look that it might be breaking in early trade yesterday. It hasn't, and we've pushed back up pretty strongly off that zone. Go figure, that goes along with oil prices coming down and Trump's words last night. Can't say that those areas don't move the markets. They absolutely do, and with oil now starting to look a little bit bearish overnight, even though it's held a level of support at the $80 mark, we have seen a little bit of that tension come off the equity market, and we saw a strong bounce there from support on the ASX. Something to be mindful of though, we have hit a 4-hour level and also a daily level of resistance. So just keep our eye on that. There is a better level of resistance a little bit further up, but we'll just keep our eye on the movement there of the market. I am still very bearish on indices based on what's going on in the world at the moment and the uncertainty that I would say will prevail. So this move up might have just been a small move up at an area of support, and we might see that area break down the track. But let's just see if the war does start to stabilise and we do get a surrender, or it does end, that could change things again. Looking at the S&P, very similar, that sort of level that I've been looking at with my little microscope there of that 6,500 level. I really do think if that 6,500 level on the S&P breaks, then we could really see some substantial downside, at least as far as that 6161 mark, but probably as far as 54 area, which I've got marked out here on my chart. For now, it's holding though, the 6,500 zone, and overnight, in line with Donald Trump's words and oil coming down, we've reached that area, daily area here of resistance, or former support now turned resistance. We are reacting in the early stages off that, but let's just see how that goes over the next day. The Dow is actually the one that I was most interested in for an opportunity or a trade. And I'll just highlight here on the daily chart, we have bounced from close to an area of support here on the Dow. We've come back up to a daily wick over wick or 4 hourly level that once again was former support, and I think can now act as resistance. So I'm actually in full disclosure on a trade at the moment. Very small profit at this point in time, but I quite like the zone. I'm still fairly bearish with all things considered on the Dow and on the indices in general in the US, based on that weaker than expected non-farm payroll data and also the unemployment data sneaking up just a fraction. Obviously at the same rounded figure, but still unemployment was slightly higher. So maybe the job market in the US is starting to cool. And when you add the war tensions and the prices of oil and energy to that mix, I still think there's a little bit more downside here in all indices. So I have supported that view with a trade at an area of resistance and also an area of supply. So we'll see how that goes, and I'll keep you updated on the success of that trade. Just a quick look at currencies. If I jump into the US dollar to start with, or the DXY, we did see a gap up over the weekend with continuing to escalate tensions and uncertainty in the Middle East. That gap has now been closed with a really big negative move on the US dollar. I think that's probably based on some of the jobs data on Friday, but also based on what President Trump said in regards to the war maybe being toward the end based on the success of the US military. Obviously, we don't know that yet until it's finished, but I think we could see a little bit of a cooling on the US dollar based on those factors, and there is plenty of support and demand here at the 97, high 97s, maybe early 98 level there. So I'm keeping my eye on that for opportunities, and I've already got a couple of orders in on pound USD, euro USD, and that's based on filling some gaps here at an area of support turn resistance now. But we've got a gap here on this British pound chart, and I think that gap can be filled, and we can maybe see it push down further on the pound. We've got a weaker pound at the moment, and the US dollar, especially once it hits supply a little bit further down, will be quite powerful, I would have thought. So we've got a zone here, maybe a little bit earlier, maybe the zone further up here will align better with the demand zone on the US, on the DXY, but we will see. And then if I also look at the euro, I've got a trade on here as well, on I believe it was an 8 or a 4 hourly level. I'll just jump on now. I've got a bit of an 8 hour level, even a 4 hourly level here, just at resistance. The trade idea is for it to come back up into this zone of resistance and supply and push back down. So we'll see. Both might be a little bit early based on looking at the on the US dollar chart here. There's a fair way to come down to fill this gap and to come to this area of demand, but it may not come all the way down. Who knows? We've got a gap here too that I'm just going to mark out. So let's just keep our eye on that for the week. But for now, a few trade ideas in there and orders in for this week. Already in my trade on the Dow. I will keep you updated into next week as to how these go. What I do think, though, is I think we'll see continued USD strength. And I also think that the indices could continue just to roll over for the short-term future. I don't by any means think this is doom and gloom. I've said it in the past, it's more likely a correction, but we are due a reasonable correction on the indices. We have had a 4 to 5 year cycle of bull trend. Once you get to that end of 4 to 5 year cycle, you usually see a bit of a correction, and I think that correction's coming. So that's my thoughts on things. If I start to see, you've got to be fluid as a trader. If you start to see things change, you do change your view. But for now, I think the clearest path for indices at the moment is more down than up. Thanks very much for listening. I hope you all stay safe, and we'll talk to you in the next one.